Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
I'm Tim Stenivek along with Carol Masser. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Denitsa Sakova. And Denitsa, it's smack dab in the midst of earnings season, so we got some earnings stories.
Yeah, let's start with one of the big winners, American Airlines. It was up as much as 8%. Now the stock is up 6.4%. The ticker, of course, is AALL. And it's coming off pretty good earnings. Adjusted earnings per share were well above what the street was expected. The street expected adjusted was about 17 cents, and what we got, they expected 27 cents, and we got 17 cents. So we're seeing big relief there. The stock is actually down 31% before the earnings report. It comes after a pretty strong quarter for all airlines. We're not talking only about American Airlines. We're seeing strong trends in corporate and premium leisure demand. What people are saying is that premium cabin demand has been very strong, but some analysts are worried that we may be seeing peaks there, a peak there. So that's one concern. And that's one reason investors have been potentially worried. But today, very strong reaction. American is the last of the big four airlines to report quarterly numbers. We've had really strong earnings season for them. And what we're seeing from the airline is that it now sees profit this year. It was previously forecasting a loss. So big shift there.
Yeah, exactly. So return to profitability, right,
yes,
in the fourth quarter. So that is a big deal. Hey, one that has certainly been on our radar over the last week, ticker is BYND. We're talking about Beyond Meat. I mean, it's been on a tear until kind of as of late, maybe as of today,
yeah,
for the most part.
This is not really a fundamental story. It's not about the earnings, but it's about the meme craze. And we really care about the meme craze. It's Beyond Meat. The ticker is BYND. Shares yesterday was up as much as 112%, and then they ended up lower. Today, they were down as much as 23%, and they're still down double digits. And it's been a very volatile session. It's one of those new favorite names. There was one investor, Dmitry Shemenkin, who posted on social media, and then there was a whole retail craze. But we've seen so much volatility with those momentum names. Like this boom started on Friday. It's already fading. Like the meme stock we've seen this year, it's a little bit different, like less long lasting than some of the trends we've seen before. I guess retail traders are excited about many things like zero-day options and so many others. But the stock is still down about 20% this year. It's obviously very far from the peak we saw during the pandemic. It received a massive boost. People were ditching meat for those healthier alternatives. It was such a craze, like it was impossible to find in restaurants. But now investors are cooling down, and even meme traders are cooling down.
I mean, I'm just looking at the FA function on the Bloomberg. I mean, declining revenue growth, negative free cash flow. I don't know.
The fundamentals are not there.
Yeah, not so pretty.
On telecom, also hearing from some telecoms companies of late. T-Mobile, what's going on with T-Mobile today?
Yeah, T-Mobile had a great earnings report, but investors weren't so excited. They expected better than expected subscriber growth, but investor focused on increasing competition. Of course, this is the number 2 operator. The ticker is TMUS. The stock is down about 3% now. And the fierce battle is, of course, with AT&T and Verizon. They've been doing all those different deals to kind of dangle promotions to lure new customers. Of course, there's been a new iPhone, and that has kind of helped, according to T-Mobile. It has added 1 million new mobile phone subscribers in the 3 months that ended September. So pretty strong. That said, their churn rate has risen a little bit. AT&T said a similar thing. So perhaps people are moving fast between different carriers. And T-Mobile's average revenue per user is actually lower than what the street expected. So perhaps that explains some of the disappointment here. But yeah, interesting space to watch. T-Mobile is actually flat year to date. And obviously a lot of pressure today after our earnings report that analysts were pretty optimistic about.
Yeah, that's kind of interesting, right? I mean, I feel like we've seen a lot of earnings reports coming in fairly decent, but this one, maybe some questions.
But I also feel like with this space, what's interesting about this space...
you said it was decent, right?
Yeah,
So
yeah.
Sorry,
1 million customers added in one quarter.
You think of like the big 3 wireless providers, AT&T, T-Mobile, and Verizon, but then you have all these like smaller offshoots that end up just essentially leasing capacity or leasing spectrum from
Exactly.
Yeah.
The big ones. So you're paying them kind of no matter what.
I have so many of my friends actually using those. It's fascinating. I wonder
Like
if it's a
the Mint Mobiles
generational.
and-
Exactly.
I got to tell you, I feel like you went through the list. It's like been our carriers, I feel like, over the last couple of years, because we've been bouncing around and it's just I'm never really happy.
Not loyal.
Wow.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.